FX Morning Mayhem podcast is an essential listen for currency traders. Each episode covers a curated watch list of key currency pairs alongside insightful market observations. It highlights crucial daily news events that could influence the market, ensuring traders are well informed. Additionally, the podcast offers valuable trading strategy tips, catering to both new and experienced traders in the Forex market. This podcast is for educational purposes only. None of this info should be construed as investment advice. To see the trades called out live for free on our Slack channel, click the link in the description or scan the QR code to join the trade faction. If you find this podcast valuable, please follow and share with a friend. And now, on with the show.
This is Aussie New Zealand dollar in an uptrend. We are looking for a long setup, but it is not in the zone. So we are going to ignore that for now. Aussie US dollar, this is in a downtrend. We're looking for shorts. We are in the zone. We had a nice sweet spot. I think I traded this last night. That was from last night, so we're waiting for another sweet spot to happen. We got a big shot down. I'll explain that in a moment. This is the one we were just talking about before I started the show. Downtrend, looking for shorts. This one actually was fired off a little bit earlier this morning. Both of us were in it. Both of us were good boys and had profit targets set. And the employment numbers came out and blew right through our profit target. I got a little positive slippage. You probably did too. You should look at your history. But this ended up being a 100-point drop on good employment out of the U.S. Pound Canadian dollar, downtrend, looking for shorts, but we are hyperextended, so not going to pay attention to that for now. This is the New Zealand dollar, US dollar pair, downtrend, looking for shorts, in the zone, waiting for a setup. Everything's going to have to settle down from this employment news that we just had because there's several pairs, as you can see, that were affected by this. Here is the Singapore dollar, Swiss franc, going to the upside, in the zone, looking for longs. This one is okay. We just need a sweet spot to set up. Dollar CAD, uptrend, in the zone, looking for long, same thing, waiting for a sweet spot to set up. And finally, dollar Swiss franc, in an uptrend, not in the zone, and hyperextended. So we will ignore this one completely. So what all this commotion is about is that, let's see, we had two sets of numbers. We had Canadian employment numbers, which were really good. And we had US non-farm employment change and unemployment numbers, which were really good. And the unemployment rate went down. So I'm sure President Poopy Pants is going to take credit for this. Yeah, he's gonna make a big deal out of this. And like you said, they'll probably get adjusted next week when nobody's looking.
Yeah, pretty much.
So that is what that's going all about, which leads me to today's market insight. So Dave, there's a lot of talk about this AI stuff. And I ran across a very interesting article about how it will affect the finance industry, which is related to what we do since we're both traders. So here's the scoop. They're projecting approximately 200,000 banking jobs will be eliminated over the next 3 to 5 years, with a 60% reduction in workforce in the banking industry. They're talking like a 5 to 10% banking employment decline because of AI. What they were saying is that if you are in something that is a very routine and repetitive task, you are at the highest risk in that particular industry. Now, that's the downside. Now, the good side is they are also saying that AI will boost banking profits by 12 to 17%, which is anywhere in the neighborhood of 120 to 180 billion dollars.
Yeah, it's just because they just cut 250,000 jobs.
I know. I know. And they're expecting like a 5% productivity increase.
Now, the increase I agree with on that one. I like we're eventually there's going to be a stoppage of AI. There's only so much you can do. And now you can see it. They're just fine tuning things, but it's just, will it make it that much? I don't know.
I don't know. We'll see.
I mean, I just see now, do I see a lot of, well, we're seeing a downturn in like tellers and cash in general,
Yeah.
but I don't know where they're going to get all these jobs. Maybe they'll get through some of them on the back end, but
I think jobs are just going to change a lot. They're saying the new roles or new jobs in the banking world are going to be data science, which is obvious, cybersecurity, because everybody and their brother is going to be trying to break into the bank virtually.
oh yeah, and if you're going to use AI, guess what?
Yep. And compliance will also be, yeah.
Interesting.
Yeah. Go to school and learn about AI, boys and girls. I guess that's the moral of the story.
Yeah. Yeah. It's not just for writing your English papers. We're creating that PowerPoint presentation that's going to wow everybody in the boardroom.
Or phony baloney apps that don't do anything.
Oh, yeah. There's a bunch of those too.
Yeah.
I'm curious as to what they're using that, going to use that for. So I know it doesn't.
We'll see. It's just there's a lot of gotchas in AI. I think the models are coming to, like you said, the end of their not usefulness, but they're not living up to the hype. They're running out.
Yeah. At a certain point, more data is not going to help your model. Sometimes a lot more data hurts the model.
For example, the model that I developed for picking the trades, I have it tuned in really good now, and I'm not going to touch it because every time I tweak it, it usually just gets worse. So it seems to be tuned in just perfectly right now to detect the sweet spots for us.
Yeah.
So that's a perfect example of too much. If you give it too much data, it just gets dumber.
Yeah. You just got to stunt its growth.
You just got to wait till it's an adult and stop. That's all I have for today.
Yeah.